Welcome to another session. We're having an awesome masterclass today lined up for you guys and girls. Liquidity traps and candle math. This is a topic that it's dear to my heart, and a few others in GTG, of course. We are very much smart money traders in the group. A few of us anyway are, and I thought that today could be a great session to run through the basics of what is smart money, why it's important to trade confirmations, what are the traps, and be prepared not to become the exit liquidity, rather to follow the money. This is what today is going to be about. So I encourage anyone that is listening to the recording to please leave a comment down below on YouTube, and if you are listening live with me today in the Discord, thank you for being here. Make sure to use the chat to ask any questions as we go. This is still an interactive session. I want it to be, obviously I'm going to be talking for a little while, but if there's any questions as we go, please feel free to put them in the comments in the Discord, or even just tag me on YouTube. So without any further ado, let's get cracking with liquidity traps and candle math. Don't worry, we're not going to do any math. There's not going to be any mathematical exam. I am shocking at math, but what we're going to do is we're going to understand first what is smart money. As usual, little disclaimer that nothing provided here is financial advice. Trading include risk, and if you decide to trade, just be prepared to lose. Okay, before we win, there's always losses, so everything is at your own risk. With that out of the way, we are going to understand what is inducement, what is breaker structure, and what is a breaker structure fake out, and what and how we can gain entry precisions. This is a topic that I've been asked to cover from a couple of people in the Discord. Obviously, we've had some really good sniper entries, and today we are going to kind of understand how we get to those entries to be so precise and whatnot. So let's have a look first at the candle. Now, for some of you, in fact probably for most of you on here on the live, the first part of this masterclass is going to feel a little bit easy, right? What is the candlestick? It's pretty simple. So obviously, if it's a bullish candlestick, that means that they're open. You can see here is here we have a close, which is when the candle closes. So if this was 1 minute, at 00 second, the candle opens here. Somewhere between 0 and 60, the candle has gone down and it's gone up, and at 60 seconds, which is the 1 minute, it closes here. Pretty straightforward. And vice versa for a bearish chart, bearish candle, sorry, it opens here somewhere in the 60 seconds, it's gone up, it's gone down, and eventually closes here. So important to understand how a candle works. In between here, we have a lot of order blocks. Obviously, they go up and they go down. But what it's important to understand is what is candle math. So the best way to understand what candle math is and how we can effectively use it is you have to understand that candles have all different types of patterns. I didn't cover it today because that's going to become another masterclass, but there's all different types of candle patterns, and there's many of them. But for today, just understand that we have a body and we have wicks, right? This is like a candlestick, a body and wicks. Most retail traders, that is most of the YouTube traders and self-taught and whatnot, they consider wicks a lot more than maybe perhaps they should. Wicks are important, but everything within the candle is one story. The whole candle teaches us the story, right? And this is why it's called candle math. And I put up here, this is the intent. So what a candle does, it prints on the chart what the intent of buyers or sellers is in that precise time frame. 60 seconds in this case, if we're doing a minute time frame. So a wick through the structure is usually just a liquidity hunt. Okay, very important to understand. So wicks are very important, but what we want to do as smart money traders and also as a best practice is really just focus on the closure of those candles. And obviously we can have candles from any time frame, from 1 second to 1 year, right? But and every candle is going to be different. So just know that for the purpose of this session and this masterclass, we are going to be talking within the range of a 15 minutes candle to perhaps a daily or a 3 days. So that's the kind of range that we're talking about here. once the wick effectively goes and hunts the liquidity, that's called obviously an induction, but or inducing. We'll get to that in the next slide. But for now, just know that the real break of structure, which is when we change a character, happens when a candle closes above if we are in a bullish pattern, or below if we are in a bearish pattern, the level, and it needs to do so with strength. Real important, highlighted here on the slide. It needs to do so with strength. So if the next candle was to be perhaps not so strong, right? So if we have a closure that just barely, let me just do this here, just barely closes above, that is not with intent, okay? So we want to see a strong closure for a proper break of structure to happen. So to sum it up, wicks, we can consider them the inducement, and the bodies are our confirmation. Hence why this is part of the intent, okay? Think of candle math as the language of volume, aggression, and intent all together. So when we're looking at candles, we're not just looking at a succession of candles, but each candle tells a story. If you actually stop and you analyze each candle properly, you will be surprised how much we can tell from the market. And this is what today we're going to do a little bit later on. So, for example, a wick breaks the previous high, but candle closes back down. That's a fake BOS, and we're going to cover that. But if the body closes strong above a bullish, then it's an intent that is confirmed, and therefore we call it break of structure. Okay, so let me know in the chat if this is not too hard for now. I don't think it is. I think everyone is pretty on par with these things. And now we're going to talk about the traps. So what is an inducement? We just made an example here. So if a wick breaks the previous high but the candle closes below, that is a fake break of structure. And that's exactly what happens here, right? You can see we're obviously going on a bearish trend here. We have a higher high in this case because we were coming up from a lower perspective. Then we have a lower high, and then if you are one of the retail traders that trades out of wicks, you would have seen this and thought this was a break of structure. This is not. You can see the wick takes out the liquidity level above here and induces, and we'll talk about what induction is, traders to think that that's a break of structures, where in reality the closure is actually below. And then once we print the lower high, because the body closes, you can see body closes below the previous high, then we have the reversal. Okay, so inducement is when the price creates temptation. That's what inducement is. It tricks traders into getting in too early or to go into the wrong direction and just sweeps them out. Okay, so if you had placed your stop loss here, you would have got stopped out, just to sweep them out before the real move happens, which is in this case, you can see I've got the blue arrow just going there. So there's a few different types of inducement, but for today we're covering the equal highs and the equal lows, obviously, which is, you've seen in my charts fairly often, there's a dollar sign and a straight line. We have internal structure sweeps. So in the middle of a move, you can also have sweeps of liquidity. So if this is the range up here and this is the range below here, this is an internal sweep of liquidity, right? It's not external. We haven't got on the top of the range and we haven't got on the bottom of the range. We can also have quick impulse moves without the close, of course. And finally, we have the trend line or the support, if you like, when it bounces, and then eventually, tell me in the chat what happens. I'll cover it pretty much on every live. When we see a trend line, what happens? We have the market. Oh yeah, market is trending up. Yay! We're just gonna keep longing. We're geniuses. Look at this beautiful trend line here, and then you get wrecked, right? You thought you were just a genius here because you were just bouncing off the trend line perfectly, and then this is what the market does. Smart money, that's right, building liquidity. This is all liquidity building. So in reality, if you're trading smart money, you just wait for this and then boom. All good, George. I'll catch the replay, and yeah, just make sure to leave a comment. this is what this is what this is the main types of forms of inducement, right? And what is important? Why is it important to understand this kind of inducement and smart money? Smart money uses this type of pattern or inducement to build liquidity, and you can see big marks have put it in the chat. Without this, there are no stop losses to fuel the real moves. What do I mean by fuel? You have to understand that in trading, for every person that longs, there's someone that shorts. It's a tug of war between the buyers and the seller. If you're winning, someone is losing, right? So smart money, his or their main game, if you want to talk about entities, is to stop you out. They get fueled by your liquidity, right? So understand that. Sorry, Sexy, you want to say something? No, I don't know who was. Someone come off mute. So inducement is nothing else but the building of liquidity, which is necessary. But if you can recognize it, you can avoid being the liquidity. This is probably the most important sentence you'll see in tonight's class. If you can avoid being the liquidity, if you can understand where the liquidity is, you don't turn into liquidity. Okay, so change of character, and then we'll do it later. So what should we avoid? We should avoid the typical retail trap checklist. I've got a checklist here for you. The typical retail traps. Okay, they're pretty straightforward, but you'll be surprised by the amount of people that are new to maybe trading, that just been watching YouTube channels and or eat TikTok lives and whatnot. And this is the stuff that gets pushed, you know, when you're starting to trade. Like, oh yeah, you trade this way, and you're gonna keep winning until you're not. Okay, so avoid entering when you see this. When you see wicks, breaks with no body, and a close above or below the key level. Again, this was a great example. You don't enter here, right? Like you just don't do that. A break or structure that happens far outside the premium discount zone, and we'll talk about the premium discount zones. But if you watch our episode from a couple of weeks ago, we talked about this extensively. These are the Fibonacci levels, right? We talked about the premium and the discount zones. If you don't know what they are, please make sure that you go back and watch that live, because that was we went through into pretty detail into that. So change your character with a low volume or during low liquidity sessions. Now in the chat, what is a low volume or low liquidity session, and do we know what the sessions are? Bimaxo and Sexy, you're not allowed to answer because I know that you know the answer. What are the sessions that we play with? Don't get upset. Or you can take yourself off mute if you prefer. Come on, team. Give me something in the chats. What do we have? Is New York a session? I've lost my mouse. What happened to my mouse? No one in the chat? Alright. New York, obviously. We have London, obviously. We also have... anyone else? Asia? Come on. What else? London. Asia. New York. Oh, come on, team. Little bit of interaction here. I need energy in the chat, otherwise I'm gonna fall asleep. Anyway, we're talking about liquidity in different sessions. We need sessions to be liquid. That's why trading on Asia session for us in Aussie is not ideal, because there's not a lot of liquidity in Asia session, unfortunately. The most volatile period are obviously the New York and the London sessions, which are much better to trade with for these exact reasons. Sydney, yeah, well, that's part of Asia, Tokyo. Okay, so that's a Tokyo session, effectively. We also want to avoid entering when we see entries before a liquidity is swept, meaning we want to wait for the liquidity to be swept before entering a trade. Okay, so if you see a liquidity being built, and I've got an example here, you can see this was obviously a change of character, and I'm going to run through this in a second, but you can see liquidity is being built. You don't enter here, you just want to see the liquidity first being taken out. And then obviously we don't just enter blindly out of fair value gaps or imbalances, whatever you want to call them, without structure confirmations. Instead, what we should be doing is wait for the structure to shift, otherwise known as BOS, breaker structure. We want to seek intent confirmation, meaning strong intent, strong closes above or below, and look for a mitigation level entry. Now, this is I just took this on Bitcoin, so we can actually go and go back. I saved these charts on purpose, so I know that they look a little bit funny because they were on a lower time frame. So let me just go and find them back up here. So the slide that we're looking for is this one. Alright, so let me just close this out. What do we have here? Obviously we had up here all the way, and I'm just going to take my arrow so we can see what I'm pointing at, and we're going to make it nice and big so we can see. So we can see we had equal highs. These are equal highs 1 and 2. So this is obviously a major level of liquidity. We're going to use that for later. Structurally, we had lower highs and lower highs being made, and now I'm on the 50 minutes, but really I think it was on the 1 hour that I was looking at when I took that screenshot. Let me just go back and find it. I should have put down the time frames, it would have been easier. Apologies. 2 seconds, I'll go and find it right there. There it is. So we can see up here we had obviously lower high, lower high, lower high, lower high, lower low, and then here we had a change of character. Change of character means that we've gone from a low to a high. All of a sudden the character of the trend is changing, right? This is a change of character. We don't trade off this, because this very often is a trap. It's one of the traps that we want to avoid. What we want to do instead is we want to see the change of character turn into a break of structure, and it needs to be done with a strong intent. So you can see we've gone from lower high to all of a sudden we have a higher high, but you can see how weak that was. It wasn't very strong, right? So this is not enough for me to enter. Sure, I marked this as a new structural high, and then I want to see a new high being made, which is this one right here, right, with this wick. This is a strong intent. You can see how strong this candle goes up above the previous high, which was also the previous high, and closes nice and strong. And then what do? We wait. Okay, great. So we now print a new high again. Oh, did I miss the whole move? No, what you did, you missed the change of character, and you're going to enter on the retest. So what we do is once we print a high, second high, we go with a nice old fib from the low to the high, and we wait for our favorite areas, 50 to 621A or 786 to 886. And this is exactly what happened. You can see here. You can see we went from the high, the new higher low to the new higher high, and then the market takes out all this liquidity that's been building here. This was all liquidity previously, right? So this was all induction, liquidity building, trend line, however you want to call it. But the market comes, takes it, and then obviously it moves up. And this was a very nice 1 to 4 or 1 to 5, not quite a 1 to 5, but 1 to 4 at least. Super easy to take. 786, 886. Where do I put the stop loss? Below the previous low. The entry opportunity was the retest, right? Not the first, the second retest. And obviously, what do we take as take profit? That's why we look at the previous equal highs, which is obviously the next liquidity level. And that's exactly where we went. So this is on the charts, what this checklist effectively, the better approach is in terms of trading. Does it make sense, everyone in the chat? I want to make sure that you're all with me, and I'm not just...
Yep.
Yeah, perfect. Awesome. Thank you. What is a breaker structure? Again, we covered this the other week with breaker structure, which is effectively when we change the character, and then obviously the market goes from bearish momentum into obviously a bullish momentum. So this was the breaker structure right here. And you can see we can have a few different types of change of structure. We can have a break and a retest and a liquidity sweep, which is obviously an induction and it's a trap, one of the traps that we just talked about. And then we can also have equal lows, which is forms liquidity there. But it's important to understand that the breaker structure and the change of character, otherwise known as ChOC, they can trap you. And here is one of those examples where you have BOS. Oh yeah, we're gonna keep going up, right? Because it's bullish. Hang on a second, I'm gonna put a buy here, and then this effectively is a trap. And this is why we don't enter on the first retest, because this could have been a trap. We enter on the second, right? So if we were to enter on the first retest, we could have been, in this case, stopped out. So we want to make sure that we always seek the second confirmation, because ultimately trading is a game of probability. So all we need to do here is take the most probable trade with the most possible confirmation that we have. So the most common trap signs, what are they? They can be the first sign of a BOS break, then retraces fully. So if we break structure and then retrace completely, that's a big red flag. If there's no candle close but just a wick, sometimes it can happen like really big wicks with a very tiny, like in this case, right? You can see this is a perfect example here, because you would have gone long from this candle. Like if you didn't, let me just do it properly so you can see. So if you were to do this, you go, okay, so we are making higher high, great. I could have potentially enter from here, right? Like I could have done something like this with a low just behold there, because why not, eh? Well, like this looks good. This is a 50% to 618 roughly. Yeah, just above the 50%. So this could have been a trade. And then guess what happens? Look at that candle printed. That was obviously a 1 hour candle, so quite powerful. And then as soon as we print that little candle, boom, we get stopped out. So this was a great example, of course, of what can potentially happen with traps. This is what the traps are, right? So we need to make sure that we look at the shape of the candles. You'll hear me talking about the shape of the candles quite a bit. And the other thing to obviously look for in trap signs is when that happens right before a liquidity sweep. Which we just saw, right? What's the solution? Well, the solution is what I just showed in the chart. So we wait for the retest and the rejection after the break, right? We wait for the retest, which was here. This was that retest, and then the rejection, which obviously we went up and we rejected, right? So you can see this was a great confirmation. The trade was good, and here we could have potentially, kept the trade open, of course, for longer. But once we've taken that out, it was important to take some profit, because this was a major liquidity level right there. So and finally, obviously, the best solution, I think, which it's my favorite solution, is always use the fib levels, 50 to 61.8%, or the 786 to 886. Those two are obviously really important zones that we should always be looking for. So if I'm looking at a 1 hour chart here and I've got structure in mind, I'm going to zone in into 15 minutes. Conversely, if I'm looking at a daily chart, I'm going to zone in into the 4 hour and 1 hour, just to see on the lower time frame where my pinpoint sniper entry can be. And this is exactly what the third point is, which is I'm going to align the higher time frame bias with the lower time frame. So I need to have a bias first, and the bias is always done with the higher time frame in mind. So if I've got a bias on the 1 hour, then I can scale down into the 15 minutes and see if that bias also align. If they don't, well, the higher time frame always trumps the lower time frame. But we covered this last week already. So on to the next, which is how do we trade? You can trade however you want. You can say, Aussie, I trade how I want, and if you're making money, keep doing it. I'm not telling you to trade differently. If however you're working works for you, great, keep doing it. We are here to make money, but I can tell you how smart money does and how we can prevent turning into liquidity ourselves when we see big liquidation events. And this is part of what I wanted to do with this masterclass today, because we are seeing a lot of manipulation, and we're going to see more and more manipulation with big entities and ETFs. So it's important to understand how smart money operates. We're going to see a lot more of this. Okay, so how do we trade? Here's my personal my optimal checklist. This is my personal checklist. You can tweak it, you can do whatever you want with it. This is how I trade. So I want to see the liquidity has been swept. So we just covered that, right? Like we just swept liquidity. This was liquidity. We swept the liquidity. I want to see that the BOS is confirmed by a candle close. I actually have this right here, so let me bring it right here. This was it. So where was it? Here, there it is. We're going to the 15 minutes. I'll try to do everything onto the same chart so we can actually go and zoom in into the examples a little bit easier. So I want to see, no, it wasn't that. There it is. Cool. So we have obviously change of character. You can see here we've gone from low, 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 low to lower high, and then eventually we have a change of character. Then what do we have? We have a breaker structure. So this became from the change of character, obviously here, change of character, we've gone past the previous high, and then we print a new high. So this is the first breaker structure, becomes a high, right? So this is the breaker structure is now confirmed by a candle close. Yes, we are much higher, so I'm happy with that second confirmation. And then we want to see an entry at or near a fair value gap or an imbalance or a fib zone. Do we have a fib zone here? Well, we do, because you can see, first of all, we retraced here. So I never take this trade, right? We just talked about not taking the first, but the second. So I want to see the second breaker structure, which is this one right here, past the first one, second, and then I take a fib, and I'm going to make it a little bit bigger because it might be a little bit hard to see if it's too small. But I want to take a fib from the low to the high, and this is where I include the wicks. And obviously I have my 50 to 61A zone, and I also would have had the 7A6 and 8A6 as an entry too, but in this case didn't hit because the 50 to 61A hit perfectly, and boom, it also manages to fill a fair value gap which was created here. You can see the imbalance between this wick printed and this wick printed. There was this big white gap here, that's called a fair value gap, and that entry managed to both fill the fair value gap and also hit the 50 to 61A. So this was a great entry right there. You can see it. How do we put the stop loss? Obviously we put the stop loss a little bit below the previous low in this case, right? And where do we put the take profit? Well, the take profit was the previous major liquidity level. Equal highs, boom. Again, this could have been higher, but with a 1 to 5.5, 1 to 5.25, sorry, with the 5.25 risk to reward, you just take the win and you run with it. I also want to see a high time frame and a low time frame in agreement. We talked about it. And I also want to see that the entries within a discounted or a premium, depending on the direction. So discount if I'm going obviously on a bull position, and I want to see that at a premium, meaning high if I'm looking for a short position. In this case, obviously it was a nice discount because you can see it was still quite low structurally. The risk management we just covered. I want to put the stop loss just beyond the sweep liquidity or invalidation zone, which is just there. I don't want to put it at, because often we might actually tag and go and hunt that liquidity below the previous low or high, depending on the direction. So I want to put it just a little bit below or just a little bit above. And also want to see the take profit based on the next liquidity on high time frame imbalance, right? Previous liquidity, nothing too hard to understand there. That was my take profit right there. This is my personal checklist. This is what I use for my trades, and that works for me. So we're nearing the end here. So the key takeaways for me in these sessions were candle math is nothing else but, remember what we talked about? So candle math, think about it as the language of volume, aggression, and intent all together. Okay, so that language for me is more important than the quick breaks. the quick breaks can be a little impulsive, weak, or anything like that. So it's more important to have a bigger picture than just looking at a single wick. Inducement is not bad at all. Inducement is great, but it's a signal, because liquidity is fuel for smart money. We need to watch for liquidity to get swept. Once the liquidity is swept, we can then take our positions. And obviously, breaker structure and change of character can be traps unless confirmed, right? So this is one that we don't trust the first BOS. We just saw here. We don't trust the first BOS. We enter on the second BOS for that reason exactly. We wait for the structure to shift, and we want to see the mitigation. The mitigation in this case was filling up the fair value gap or imbalance. That means that that where smart money was in drawdown, it's effectively now mitigated. And also we want to wait for the intent, the confirmation, and the premium discount all together. This is one picture: intent, confirmation, and premium or discount. Now, do we have intent? Yes, we close nice and high. Previous, look, much higher than the previous. We have intent, we have fib level. We're great, we're good. And then the premium discount. Yes, we do. And we don't want, ultimately, of course, we don't want to be the liquidity. We want to hunt with smart money. Okay, so this was a very brief session on as to what is smart money, how to trade the basics of smart money without going into uber complex. There's many different types of trades and courses out there that you can follow. There's ICT, there's big terms that you can follow. That's all too confusing for me. I try to simplify and distill it. This is how I trade personally. And yeah, if you want to understand, yeah, Max has just put something in the chat. It might be worth explaining what I mean by liquidity. So liquidity is what we just talked about. When the market makes equal highs or equal lows, we are building money, meaning that there is obviously stop losses above, in this case, because obviously we are below. The market is trading below this level. So above here, we have stop losses, right, stacked from traders. And the market eventually goes and hunt for those stop losses and liquidates them. That's why it's called liquidity, right? So this is why it's important to understand that liquidity gets taken out eventually by smart money, and all the stop losses that were built and built and built up here, boom, get liquidated, and off you have it, right? And obviously we have a change of structure versus a breaker structure. So change of character versus a breaker structure. You can see change of character is literally when we go from a bearish into a bullish, and breaker structure, obviously we are now breaking the structure and we keep going out. So this is a breaker structure, this is a breaker structure, this is a breaker structure. All these are breaker structures, right? Change of character is this, when we go from here to here. So that's kind of, yeah, 30 minutes, 35. I'll try to keep it distilled into 30 minutes or below. Went a little bit over, but yeah, what do you guys think? Let me know if you have any questions in the chats, or if you have any questions in the YouTube channel. Feel free to leave a comment. And also now we can finally go and have a little bit of a look-see at the markets in real life, and we can have a look at some setups that potentially might eventuate now, applying everything we just talked about, right? This is how I trade on a daily basis. I try to give you guys what's my current outlook on BTC? Let's have a quick look. Obviously, I should probably have to clean my chart after the session, but current outlook on BTC, well, if we literally just go by what we just talked about, right? Like we just talked about induction, we just talked about structure, change of character. So I'm on an hourly first, so I like to start from a daily, and from a daily perspective, I have this structure. So where is my range? My range is from the previous low, which in this case is here, all the way to up here. So this is my trading range. So first of all, on a daily, am I in a good area currently? I think very much approaching an important fib level, which, you know, if we take it from here to here, and then gonna have to reactivate some of those. So there's 76. 50%, 76, cool. Yeah, we are at 76 right now. So it's for me, BTC personally, I think BTC is going to turn any second now. And I've got my entry, you can see, set up here at the 3-day, just because I can see a 3-day order block there. Obviously we didn't cover order blocks today, but can be something that we talk about in next sessions. I have a 3-day order block point of interest set up there, but I do think we are very close to reversal. And the fact that we are 76 depend also where you take your fib. Like, you could consider this as potentially the low. So if we do from here to here, you know, all of a sudden you're not at the 76, but you're between the 50 and to 618, which is also another powerful zone. So either way you take the fib, we are currently at very important levels on a daily perspective. On a 4-hour, we are not, or maybe we did just print. Did we print? Maybe just a lower low. I'm sure that different price feeds might give you a different price, but yeah, you can see, like, we didn't close with intention. It wasn't a strong close below. So what this is telling us is that there's indecision. So the sellers were really much in control here. Obviously the buyers took a little bit of control back, and now we're back into indecision. So there's a lot of indecision. We are failing to close below this area. So what I'm expecting to see, and you can see this was my 3-day entry, I reckon there's going to be a very quick into that area, and then we just bounce right off. So this is on a 4-hour, and then on a 1-hour, very much the same. We actually failed to close even below. So confirming what we just talked about, low, high. You can argue that this was potentially a structural. I don't think this was a structure. The structure is up here, so this was a high, this was a low, and then obviously we retraced at a very important fib level, which would have had some orders in there, and now we're making a higher low. And what's important to now see is, do we print constant higher lows and we go and take out the next big level of liquidity, which is this one here, or do we break structure and continue lower? So what I like to do in these cases is I literally just get my I'll do it live with you guys. So I do magnet, I do my trend line, and I go shift, and I do a nice straight line, and I go close below. I've got my alert set, close below equals we retrace lower, because obviously what that means is that if we do this, and actually I need to modify that alert, make sure that you do once per bar close, so meaning that the alert only valid once the bar closes below. Okay, so, but we can also see a situation now where we do this, and we start making obviously higher highs, and then eventually we go above here, and then all of a sudden we're up here. So too early to see, but we're definitely at a critical levels here for BTC. Sorry, a bit of a long-winded answer there, Sexy. Is there a coin that you would advise to avoid for a newbie who wants to give TA a go themselves? Just thinking, is there coins out there when even the experts struggle with? Yes and no. So everything that we just covered today, obviously you can see I've done everything on a BTC chart just because I wanted to be able to go from one side to the other. But you can apply everything that we talked about today. So from literally everything, from the beginning all the way down, on any chart, Forex, gold, crypto, coffee, you name it. Like everything works the same. There are some pairs, however, that do like to wick, and you got to be mindful of that. And also, excuse me, depending on where you trade, you'll find that if there is low liquidity, wicks can be quite prominent. I'll bring out XRP now, because XRP loves to wick, unfortunately. That's just how the price action works. But yeah, you can see lots of wicks, lots of liquidity grabbing. So this is probably a pair that might give you a little bit of trouble in terms of wicks. And if you trade Forex with me, anything JPY, it's so anything yen against the Japanese yen, yen loves to wick too much. I don't like it personally for that reason, but some people love it. So yes and no. Hope that answers the question. Oh man, oof, gotta drink a glass of water real quick. No problem, Jimmy. No problem. Well, I hope you guys enjoyed today. It was just a bit of an insight as to, yeah, some nice. Did we get some tariff news? Did we? Right into that GP. Let's have a look. See. China Finance Ministry to impose additional tariffs of 84% on US goods. Jeez Louise. Man. Let's have a little look. Yeah, 15 minutes. This is the US dollar against the Chinese yen. Coming in. This could be a nice little long opportunity there. Could have been. And you can see, like, okay, what do we do now? This is on a 15 minutes. This stuff that we just covered, literally covered, it works on every market. So obviously this was the low, this was an induction, this was a fake. You think, oh, what's going to happen? Well, we've just been building liquidity. Now we're building liquidity up here. So we made a new high. We've come back from a low to the high, probably in a nice level there. Look at that. So we're spanking to the 618 area right there. And that's what happens here. Anyone in the chats? What was this? What was all this?
Is that the internal?
This is, yeah, internal what? Internal
liquidity?
That's right. It's liquidity being built. That's what it is. All this. So I can just literally just put a line. All this. I'll do a visual reference there. This is all liquidity, right? This was all liquidity being built, and now we just took it out. So now the question is, do we go and reverse potentially from here? Is this a fake out? We're on a 15-minute chart, so very low time frame. Is this a fake out, or do we potentially go and test the new highs? So always go, okay, what is the 4-hour doing? Where are we at on the daily? This is not a chart that I look by any means, USD China, but it looks like we're at a pretty high levels. In fact, the highest probably I can see on this chart going back in 2012. This is the highest we've ever been. So we've obviously made new all-time highs. So this could potentially be a very good time to look at potential shorts, right? Like, we now taking liquidity. Do we go back up here? What we'll do is, this is obviously our structure, right? Structure up here. So what we want to see is market come up here, potentially even wick higher, right? This would be the ideal, but then close below here. So something like this, and then break the structure, change the character first, and then break a structure, and then we can take the short. So this is the kind of price action that I would like to see before taking a short. I'm not just gonna hit sell from here. I would like to see liquidity being swept, which obviously we've done now. It'll be interesting to see if we can get up here, but this is probably a chart that I'll be interested in shorting. Like, look at this one, liquidity. Let me bring it up a little bit more. Liquidity being built, liquidity, massive, obviously trap. You think, oh yeah, we're making a new lower, higher low. Yes, we're gonna go higher, and then poof, just destroys all the buyers, and the real moves happen. So all this liquidity that was here taken, and then all this liquidity down here taken, and then the real move is actually on the way up. So that's why we wait for confirmations, team. Very good to see a real example. Boom. That's it. Love it. Cool. If there's no other questions, I'm gonna obviously upload this on YouTube, so it's gonna be there for watching again. And if you have any questions in the meantime, of course, just ping us in GTG. And awesome to have you guys. So thanks heaps for tuning in today for another session, and I loved having everyone there with me today. And if you are watching, thanks again for being on my channel. And yeah, I'll see you in GTG. Thanks, team. Have a great night or day wherever you are in the world. Bye.